In this week's recap, continuing concerns over COVID-19, aided by cuts in oil production overseas, contributed to continued market volatility. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. Markets remained exceptionally volatile, buffeted by the spreading impact of coronavirus, uncertain responses from federal policymakers, and the sudden drop in oil prices. The Dow Jones Industrial Average fell 10.36%, while the S&P 500 declined 8.79%. The NASDAQ Composite Index slid 8.18% for the week, and the MSCI EAFE Index, which tracks developed overseas stock markets, dropped 17.75%. A dispute between Saudi Arabia and Russia over oil production cuts, mounting fears of the coronavirus, the declaration of the COVID-19 as a global pandemic by the World Health Organization, and the news of a travel ban from Europe unsettled markets throughout the week. Stock trading was halted twice by circuit breakers, which are designed to briefly stop trading when losses in the S&P 500 reach 7%. Stocks sold off sharply Thursday before ending a tumultuous week with a strong rebound on Friday. The failure of Russia to join Saudi Arabia in supporting lower oil production targets left Saudi Arabia fuming. In response, Saudi Arabia announced its intention to raise oil output. Oil prices plummeted on the news, contributing to the stock market's drop on Monday. While lower oil prices may represent a boon to consumers in the form of lower gasoline prices and relief to companies with high energy consumption, like the airlines industry and chemical companies, they also pose a risk to the American energy industry. If low oil prices persist, it may lead to lower capital expenditures and potential issues in the credit markets, as less well-capitalized companies struggle to manage their debt obligations. In an effort to provide as much clarity into what is happening as possible, I want to personally invite you to two upcoming events. First, this Thursday, March 19th at 4 p.m. Central, we'll be joined by Brian Jordan, Chief Economist and Director of Financial Markets Analysis at Nationwide Insurance. His expertise appears in Nationwide's U.S. economic and interest rate forecast, as well as the firm's global growth and currency estimates. Brian is frequently quoted in industry media, including the Wall Street Journal, the New York Times, Investors Business Daily, and Reuters. Brian will discuss how to make sense of the markets during the tumultuous times surrounding a global pandemic. He will offer information on how to navigate through short and long-term economic uncertainty, and then take your questions during a brief Q&A session. Secondly, on Tuesday, April 7th at 10 a.m. Central, you'll have the opportunity to hear from Jeff Thompson and John Forlines of W.E. Donahue. Together, they oversee and manage more than $2 billion in client assets. Jeff is the real brains behind the decisions to move in and out of the market in our rules-based strategies. In light of the CDC guidance to avoid gatherings, both of these events will be online only, so I encourage you to tune in from the comfort of your home or your office. Seating will be limited, so I encourage you to RSVP as soon as possible. Even if you cannot attend the events live, please RSVP anyway, and we'll send you the recording. Details and to RSVP can be found at our website, www.investwithccg.com. And in our final thought today, the world's central bankers have already taken several steps to combat the economic impact of the coronavirus, including lowering short-term interest rates. The financial markets are now looking for a response from the U.S. government. In evaluating any actions from the federal government, investors may focus on the size and timing of policy proposals to determine if they can reduce current levels of economic uncertainty. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. To learn how I give my clients' life savings the attention it deserves, visit me online at www.erichagan.pro. If you'd like to get financially organized, go check out nocostfinancialdashboard.com. And lastly, if you'd like to take control of your 401k at work, visit us over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.